Okay, welcome back. 80 points lower, 17,777 is where we are at. Our alpha manager is Aman Chowhan of Abakkus Asset Management. He's with us. Aman, good to have you with us here. Thank you very much for your time. It's a pleasure. Aman, is it earnings which is keeping markets kind of constrained? Is it something else? Because there is no real support from earnings upgrades, right? It's far and few in between. Looking at the third quarter earnings, more downgrades than upgrades. How are you looking at things, Aman?
Perfectly. We share the same view that the earnings season has been lackluster. Besides financials, not much of earnings upgrade that we have seen across the board. At the same time, certain sectors like chemicals, consumers, durables, they have seen big, sharp earnings downgrades. So that's the reason. The trigger that the market was waiting for, that earnings would have a positive surprise and the market starts lacking, and maybe that is also reflecting in the lackluster market that we see today.
Aman, hi, good afternoon, Surabhi here. So, what is your approach? For instance, let me ask you a question on, on mid-caps. Of course, you have that fund which specifically looks at emerging companies. Though it's a lot of it is obviously very, very stock specific, but in general, are you seeing a fair amount of value right now on a day like today when, again, mid-caps underperforming? Do you have a big shopping list ready? Or do you think, the market will continue to drag and be a bit challenging, even in the mid-cap arena?
Yeah, the shopping list is ready, but at the same time, there is no hurry to implement that shopping list. So we feel that in the near term, there are not enough triggers for the market to just run away from here. So for the time being, there can be time consolidation, there can be few months where the market remains lackluster, and that can throw up more opportunities and just waiting for that. So while we continue to deploy some of the cash holdings that we have, but it's very gradually that we are doing.
Aman, on earnings and the point that you were making, this time the earnings has been led by the financials. It's just one sector which is contributing to the majority of the earnings growth that we've seen. The rest of the sectors have either faltered or not provided any earnings upgrades. But going ahead, bank earnings could come under pressure as NIMs start getting compressed. In that context, how do you expect the EPS to perform from here on? If the only sector which is doing well for us in terms of contributing to EPS gains doesn't do as well and the rest of the sectors are not firing, what happens to the EPS growth estimates from here on?
It's not just financials. Capital goods have done well. Select other sectors have also done well. But yeah, financials have taken bulk of the, you can say, heavy burden. Now, going ahead, I don't expect NIMs to contract sharply. At the same time, the bigger driving for earnings for financial is the credit cost. And here, the outlook is pretty good. So we have come out of COVID, and as we speak, quarter on quarter, credit costs are coming off, and this trend is expected to continue. For the next few quarters, hence, I don't see any risk to financial earnings. Along with that, I expect IT and pharma, which have been lackluster stock-wise as also from earnings-wise for the last few quarters. In a quarter or so, they will also start to contribute. So overall, I don't think that a double-digit earnings growth in India on Nifty or overall for the corporate India is at risk. Having said that, now one needs to be pretty selective in what they get into. So clearly, where there is earnings headwinds, that sector or stock, it's not going to perform in the near term.
Anything new you've added onto the portfolio, Aman, just to get an idea about how are you, what you have been doing at Abakkus?
Sure. So we continue to remain positive in financials, though they have done well over the last 6 to 9 months. This is one segment where the focus is. We are also pretty positive on the domestic growth, especially on the capex side. So EPC companies, infra companies is something that is looking good. Purely from a valuation standpoint, one can look at utilities also. That is one sector that has not performed for multiple quarters now, and valuations there are reasonable. The growth is coming back, so one can selectively look at this sector also. So this is where broadly our focus has been in the past a month or so.
Aman, I just have a follow-up to that. In your growth fund, the Abakkus Growth Fund, you do have a lot of financials in all kinds. In the top 10, I think there's ICICI Bank, there's SBI, there's also Aditya Birla Capital. So how are you, what's the approach to financials? Is it more PSUs? Is it, standard, safe private banks? Are you still looking at insurance for that matter, given what's happened in the budget? Just some more color, perhaps, on how you are selecting financials?
So clearly, the preference is private banks versus public sector banks. So that preference stays. Within NBFCs, we would like to stick to the leaders because with their the NIM compression or the cost of funds is something which they can easily manage. This mid-size and the smaller NBFCs is something that we are not pretty positive upon. Microfinance is one sub-segment within financials that is looking good. From a low base, this sector is seeing very strong growth and credit costs are coming off, and hence we are pretty excited here. Insurance, yeah, like you said, we have some experience on the insurance, and the budget clearly hit all the stocks in the segment. From here on, I think this can be a steady return because the worst of the news is behind us. I don't expect any incremental news. And there is a case that the representation that the insurance sector has done to the finance ministry, if they heed into that and they file a cap that gets removed or increased, then this can be a near-term positive news for this sector. So for insurance, steady move, and within financial, as I mentioned, clearly preference is private versus public.
Aman, we'll leave it at that. Thank you very much for joining in. That's the view coming in from Abakkus Asset Management. Some more stocks which are reacting to earnings and doing well. Oil India, that's an F&O stock, up 7.5%.